Are you investing in Nvidia? Or maybe you're looking for the next big stock to add to your portfolio as the AI revolution continues to unfold? If so, you might be missing out on some hidden gems that billionaires are betting on for 2025. It's easy to think Nvidia is the best way to invest in AI. But did you know some of Wall Street's top investors are actually looking elsewhere? In today's video, we're diving into 3 AI stocks that are catching the attention of the world's most successful money managers. And you could be missing out. Now, AI has been dominating headlines for the past few years, and with good reason. Artificial intelligence promises to change the way we live and work, offering new opportunities in automation, data processing, machine learning, and more. As we head into 2025, many investors are wondering, which AI stocks should I be watching? While Nvidia has long been a leader in the space, there are other companies, some of which may surprise you, that are poised to benefit from the AI boom. Let's break it down. Whys? The first AI stock billionaires can't seem to get enough of heading into 2025 is Broadcom, ticker AVGO. Now, you may not immediately think of Broadcom as an AI stock, but the truth is, this company is at the heart of the infrastructure that powers AI. You see, while Nvidia might be the go-to company for graphics processing units, Broadcom is the key player in providing networking solutions for AI-driven data centers. Broadcom's Jericho 3 AI fabric is a prime example of how it helps facilitate AI growth. This technology allows for seamless connections between GPUs, which is essential for the high-demand computational tasks required for AI operations. This type of networking solution is necessary to reduce latency and maximize performance in AI applications, making it a critical part of the puzzle. In addition to its AI capabilities, Broadcom also supplies wireless chips for smartphones, optical sensors for industrial uses, and cybersecurity solutions. In short, it's a diverse player in the tech ecosystem that's poised to ride the wave of AI demand. What's really exciting for investors is Broadcom's growth potential in AI. CEO Hock Tan has made bold predictions about the company's AI future, saying that by 2027, Broadcom's AI revenue could surge to as much as $90 billion, up from $12.2 billion in 2024. But here's the catch. Broadcom is not just an AI play. It's a diverse tech company with a strong foundation in other areas. So, even if AI experiences a temporary slowdown, Broadcom is better positioned to weather the storm than Nvidia, which is heavily reliant on AI chips. That said, there are some concerns about Broadcom's valuation. The stock is currently trading at a price-to-sales ratio that's above its historical average, which could suggest it's slightly overvalued at the moment. Investors like Philippe Lafont and Stanley Druckenmiller are betting on Broadcom's potential. But the big question is whether the stock can continue to outperform at these elevated levels. If Broadcom can maintain its strong fundamentals and manage its valuation, it could offer great returns for investors willing to take on a bit of risk. Next up, we have Taiwan Semiconductor Manufacturing, TSM, a company that plays a critical role in the production of chips that power the AI industry. In fact, Taiwan Semiconductor is the world's largest chip foundry, and it manufactures chips for some of the biggest names in AI, including Nvidia. But why is this company so important to investors? As AI demand skyrockets, the need for semiconductors will only continue to grow. Taiwan Semiconductor is one of the few companies capable of meeting this demand at scale. The company is increasing its chip production capacity to support the growing AI market. For instance, by 2026, Taiwan Semiconductor plans to significantly ramp up its chip-on-wafer-on-substrate (CoWoS) capacity, which is essential for packaging the high-bandwidth memory that supports AI-driven data centers. With AI models becoming more sophisticated and requiring greater computational power, the demand for advanced chips will only increase. What makes Taiwan Semiconductor even more attractive to investors is its predictable cash flow. As long as AI chip backlogs persist, Taiwan Semiconductor will likely continue to experience steady growth, as the company is essential to fulfilling these demands. Billionaires like Chase Coleman of Tiger Global Management and Stanley Druckenmiller of Duquesne Family Office are betting on Taiwan's semiconductor success, but there are potential risks as well. The biggest concern for Taiwan Semiconductor is geopolitical tension. The company's production is heavily concentrated in Taiwan, and any potential instability in the region could negatively affect its ability to meet global demand. Additionally, export restrictions on AI chips to China, imposed by the US government, could have an impact on the company's future growth. The ongoing trade tensions between the US and China are something investors need to watch closely, as they could impact Taiwan Semiconductor's business model. Despite these risks, Taiwan Semiconductor remains one of the top picks for billionaires, as it plays a pivotal role in the AI ecosystem. However, similar to Broadcom, Taiwan Semiconductor's valuation has risen significantly, with its price-to-sales ratio 45% higher than its 5-year average. Investors need to consider whether the stock is still a good value at its current price, or if it's time to wait for a better entry point. The third stock that billionaires are snapping up is Amazon, ticker AMZN. While Amazon is known primarily for its e-commerce dominance, it's the company's cloud computing business, Amazon Web Services, AWS, that has made it a major player in the AI space. AWS is the leading cloud infrastructure platform, and it's been making aggressive moves into AI by incorporating generative AI tools. With AWS, businesses can build AI applications, deploy virtual assistants, run large language models, and more. This integration of AI into AWS is a key reason why Amazon stock is on the radar of billionaires like Stephen Mandel of Lone Pine Capital, Philippe Lafont of Coatue Management, Larry Robbins of Glenview Capital Management, and Chase Coleman of Tiger Global Management. AWS contributes a significant portion of Amazon's revenue, about 17.5% of total sales, but it's responsible for nearly 62% of the company's operating income. As the demand for cloud services and AI-driven solutions continues to grow, AWS is positioned to benefit immensely. In addition to AWS, Amazon is developing its own AI chips, Trainium 2 and Inferentia, which are designed to support AI workloads. While Amazon's chips may not match Nvidia's in terms of raw computing power, they offer a more cost-effective and accessible alternative for businesses looking to implement AI solutions without breaking the bank. This could be a game-changer, as many businesses are seeking ways to make AI more affordable and scalable, and Amazon's chips could provide a solution. However, as with the other stocks on this list, there are concerns about Amazon's valuation. The stock is no longer trading at the same attractive multiples it once did, and traditional valuation metrics, such as price-to-earnings (PE) ratios, suggest that Amazon may be fully valued. Despite this, its price-to-cash flow ratio is still relatively low, implying that the stock might still have some upside potential. But again, investors need to carefully assess whether Amazon is still a bargain or if the stock is due for a correction. Looking at the table, we can see a fascinating snapshot of 3 industry-leading companies: Broadcom, Taiwan Semiconductor Manufacturing, TSM, and Amazon, at the forefront of innovation and growth. These companies are not just names in the stock market, but pillars supporting the advancement of AI technologies and digital infrastructure. Broadcom boasts a strong gross margin of 57.24%, reflecting its efficiency and profitability, alongside a respectable dividend yield of 0.95%, making it a solid pick for income-seeking investors. Taiwan Semiconductor, often referred to as the backbone of the global semiconductor industry, offers a slightly higher dividend yield of 1.10%, complemented by its consistent performance in manufacturing cutting-edge chips. On the other hand, Amazon, despite lacking a dividend, commands a massive market cap of $2.3 trillion, showcasing its dominance in e-commerce and cloud computing, 2 sectors increasingly integrated with AI. What stands out here is the diverse strengths of these companies: Broadcom's hardware prowess, TSM's semiconductor expertise, and Amazon's expansive ecosystem. Together, they represent different facets of the AI revolution, from enabling technology to delivering end-user solutions. As we consider their market positions and financial performance, It's evident that they are not just riding the AI wave, but actively shaping its trajectory. For investors, these stocks represent a blend of stability, growth potential, and innovation, making them worth watching closely as the AI revolution continues to unfold. So, what can we take away from all of this? The AI revolution is far from over, and companies like Broadcom, Taiwan Semiconductor, and Amazon are well-positioned to benefit from the continued growth of AI technology. These stocks aren't just about betting on the next big AI innovation. They're about investing in the infrastructure that will power AI for years to come. If you're looking to get involved in the AI space but want to focus on companies with strong fundamentals and diverse revenue streams, these 3 stocks are worth considering. However, as with any investment, there are risks involved, including concerns about valuation, geopolitical instability, and market volatility. That's why it's important to carefully evaluate each company and consider how it fits within your investment strategy. If you're considering adding any of these stocks to your portfolio, make sure to do your own research, keep an eye on the broader market conditions, and, if necessary, consult with a financial advisor to ensure that you're making informed decisions that align with your financial goals. If you enjoyed this video, make sure to hit the like button, subscribe to the channel, and turn on the notification bell so you never miss out on future content. We're here to help you navigate the stock market, learn about investment opportunities, and grow your wealth. Just remember, this video is for informational purposes only and does not constitute financial advice. Always make sure to do your own research before making any investment decisions. Thanks for watching, and we'll see you in the next video.